Welcome back to the Property Frontline Market Watch. Today I'm here again with Scott, as usual, but hi Scott.
Hello.
And we've also got a special guest, Brandon Perry from Devoir Accounting. Hi, Brandon.
Hi, Deb. Hi, Scott.
Welcome, Brandon.
So the reason why Brandon is here is he's going to talk to us about a very pivotal issue that's having an impact on the property market at the moment, and that is land tax. But for starters, what I will ask Scott to do, I'll just share my screen. Scott, can you cover off performance for Sydney, Melbourne, Brisbane and Adelaide for us today?
Sure, Deborah. Thanks for that handoff. And we'll jump into our regular review of monthly house prices by capital city. We have put three sources together on our chart from CoreLogic, from Lewis Christopher at SQM, which is an asking price data index, and PropTrack. So looking at Sydney for the month of February, I do just want to note the SQM data is only through February 18th, so we don't have a full month for them, but that is the trailing month ending the 18th. Sydney house price market, solid growth actually for February. CoreLogic has us up 0.3%, SQM 0.2%, and PropTrack a nice 0.5% growth. Moving over to Melbourne, so I guess we could say surprisingly maybe a bit. Some solid growth, at least for the month, coming from CoreLogic. Melbourne was up 0.4%. SQM still has it down 0.7%, and again, that is their asking price data. PropTrack, a very large 0.7% increase, which was the largest of the capital cities for the month in their index. Moving over to Brisbane, flat growth from CoreLogic, down 0.8% in the SQM data, and a small increase of 0.3% PropTrack. Finally, Adelaide, inching ahead 0.3%. SQM shows a rather large increase in asking prices of 1.9%, and PropTrack was at 0.3% as well. I'm going to hand back over to Deborah now. And Deborah, can you take us through our other capital city markets, starting with Perth?
Okay, thanks, Scott. Yeah. So in Perth, CoreLogic has performance sales up by 2%. SQM has asking prices up by 3%, and PropTrack no change. Interesting to see such a difference in these three data houses. Then in Hobart, CoreLogic has prices up by 6%, always because Hobart, very few, like the amount of sales is pretty small.
Deborah, can you just be a bit clearer? 0.6? I'm just not hearing the point.
Oh, okay. Yeah, 0.6.
Yeah.
0.6.
Yeah.
And SQM asking prices up by 0.4%, and PropTrack has prices down by 0.1%. Then Darwin, zero change. SQM, a whopping increase of 1.1%. Then PropTrack, an increase of 0.3%. Once again, Darwin, a very, very small market, so even like one or two sales can have a big impact. Then Canberra, which, is not a hiding to nothing as far as I'm concerned, like it's going nowhere. So Canberra, 0% change. SQM asking prices down 1.2%, and then PropTrack has it up by 0.2%. Nationally, I think that's too high level for us to really even cover. But generally, considering what's happened over the past few months, the last few months of 2024, where the market was starting to slow down, and then January, while things were fairly quiet, we would have to say, or Scott, you can give me your opinion on what you're hearing in the market. So there's a little bit more confidence out there.
Yeah, I think we're seeing some fence sitters who have been waiting for a market bottom to be jumping in. So seeing more buyer inquiries, buying in multiple different states. I think the analysts are saying that the rate cut has sent a positive message out into the space. So it's about buyer confidence and sentiment. The feeling is we're past peak interest rates. If I'm going to buy, why should I wait? But in reality, I think we need to realize people's borrowing capacities have not gone up that much. So it's sort of a bit of a feeling, I would say, right now. And I think we are going to have to watch the next month or two to see whether this growth trend firmly takes place, or is slightly delayed while people wait for another rate cut just to really get them comfortable with buying now.
Yeah, and at this point, we have to bring up what's happening in the share market this week, and we're finally seeing a lot of uncertainty. There was quite a significant drop on world share markets because of what our mate Trump is doing. So share market confidence is down, and normally, if we follow a trend, when there's share market uncertainty, property prices go up as well as gold. But we're not here to talk about gold. Is that your view, Scott?
I think the general saying is there's safety in bricks and mortar, and that has proved over the long term. Property's been a less volatile asset here in Australia. And we might see some people moving from shares into property, not liking that volatility and uncertainty, really.
Yeah. And then, of course, there'll probably, at some point, as usual, there'll be some profit, not profit takers, some opportunists coming in, as usual, to rescue the market.
Yeah. Hey, Brandon, have you got a perspective on that? Are you seeing many clients discussing shares at all with you, and any reaction to the falling markets?
Yes, particularly now, like in times like these, I do get clients ringing me up. I mean, even though I'm not a financial advisor or a stockbroker, clients do ring me up asking questions about these market changes, and I do give them a general idea that some people get out, others stay in, others buy in the share market, others get out and they buy another asset class like property or gold. So yeah, I what you're saying is quite true.
Yeah. Have you got any Bitcoin people who are all confident?
Oh, look, I do have. It's mostly people that just dabble in crypto a little bit. I've got a couple of clients who are a bit more serious about it, but that's a whole different area. Cryptocurrency as an investment. Yeah.
Yeah.
Yeah. Alrighty. So let's move on to our main topic today. So the reason why we've brought up land tax is because it is having such a massive impact, particularly in Victoria. So in 2023, the state government introduced some changes to land tax. I won't go into the full-on detail, but it actually has had such an impact on particularly investors, but also just general property owners in Victoria, where the land tax has increased so much that it's caused investors to flee or owners to flee or be forced out. And so when I help my clients buy property, we always consider what the land tax value will do to their next purchase. But now it has really become top of mind, and we've seen such an impact in the last 12 months that it's actually driven property prices down in Victoria, so much so that it's now cheaper to buy in Brisbane than it is in Victoria. So what is land tax all about? So, Brandon, just to give us a bit of a high-level overview, can you talk to us about what land tax is?
Okay, so land tax, just to keep it brief, is a tax on the value of land held by a property owner. Now, first of all, it's important to mention that the main residence is exempt from land tax, so you won't be paying land tax on your own home, but on any investment properties, there is a tax on the value of the land. So it's an annual tax on top of all the other taxes. So we've got income tax, GST. Land tax is another separate tax, doesn't form part of your income tax assessment or anything like that.
Plus stamp duty. Yeah.
Plus stamp duty. So, yes, unlike income tax and GST, land tax is a state-based tax, so it's imposed by all the different states and territories across Australia. And stamp duty is another example of one of those state-based taxes as well. So the way it's calculated is the valuer general comes up with a value for a piece of land.
Yeah.
Each state has a different threshold for assessing land tax. So New South Wales has the highest, being 1.075 million. So if you own property in New South Wales and it has a deemed land value of, let's say it's $1.5 million, you'll pay land tax on the amount over 1.075 million. So essentially that's $425,000 you'd be paying land tax on at 1.6%. So that's just to give you an idea of how it works. Any questions around that?
Yeah, and so I guess really the fact that if you've got a couple of properties in one state, you
Yes.
have to combine all of those together, excluding your own home. Yeah.
That's right. If it's in one state, yes. So
Yeah.
each state has its own threshold. Each state has its own separate assessment as well. So if you've got property in New South Wales and you've got property in Queensland, you receive a separate assessment for each state, but the property values, like the properties aren't combined onto one, even though Queensland did try and do that.
I know. Across Australia, yeah.
Yes, they
Right.
wanted to assess it Australia-wide, but that didn't work. So yeah, it's each separate state, but yes, all your property holdings in one state go onto the same assessment.
Yeah, okay. Scott, do you have a question for Brandon?
Brandon, just on other structures and so forward. So there are people that are looking at discretionary family trusts. You do a lot of work in the self-managed super fund space. People mostly getting additional thresholds in those entities.
Yeah, so that is like the use of different entities is one way of, I guess you could say, an investor minimising land tax.
Yeah.
There are a couple of things, like just to be careful of in terms of thresholds. So you can, so that some people have a property in their self-managed super fund. Some have got a couple of each got a property, and then they might have a family trust. This is why it's important to talk to your accountant about land tax, because there are things that you've got to be careful of. Like the biggest one being, if you buy a property in a family trust, or a company, you don't get actually, could I leave out the bit I put on company? So if you do buy property through a family trust, you are taxed on the whole value of the property, basically. So if you've got a family trust, you buy a property, you buy land, and that land's worth $500,000, you're taxed on the whole $500,000. So that's in New South Wales. Other states do have a threshold for family and discretionary trusts, but New South Wales doesn't. So yeah, that's why it is important to speak to your accountant about these sorts of things.
And so, Brandon, I guess the better question would be, when people are thinking about making their next purchase, they should go to their accountant. And can you give us a bit of an example of how you help people and how that conversation would play out?
Okay, well, the first thing I do if I get a new client coming in, and they've got investment properties, I'll first of all ask them if they're registered for land tax in the United States, and if their answer is yes, then they will receive I know that they'll receive a land tax assessment each year, and they'll obviously then pay that land tax assessment. If it's a rental property, then that land tax that's been paid is an allowable tax deduction against rental income. If they're not registered for land tax, then I would consider. I'd ask them, have they considered the land values attributable to the properties that they own, and if they do know the land values and say that we're below the threshold, that's fine. They've done their work, but then some clients that are unsure, you can find out the actual value of the land. If it's over the threshold, then that's when we need to register for land tax in the relevant states,
or maybe not buy it,
or if they're looking to buy one, then look at their exposure to land tax in that particular state that they want to buy in.
Yeah.
And then make their decision based on that. So yeah, that's one strategy among property investors.
Yeah.
Uses spreading their portfolio out across various states to avoid that threshold. Another one is, which I spoke about before, was using separate entities such as each individual and a self-managed super fund and a family trust, depending on which state it's in. Another option people look at is maybe buying a unit, because the land tax for a unit, the land values for a unit is based on their portion of the land that the block of units actually sits on. So normally that's well below the threshold if that's the only property they're buying. So they therefore avoid land tax, or if they do have other properties, they're not paying as much land tax. But having said that, one important consideration, is that while you may be avoiding that annual land tax bill, if you buy a unit, you've got obviously got strata levies to pay as well. So yeah, that's another thing to take into consideration.
Yeah. Which is a whole other conversation.
I would want to make sure you weren't avoiding growth by buying units. How about that one?
Yeah. Well, that's that's also important too.
Yeah.
Looking at property as that long-term investment.
Yeah, but I think it highlights the point that people need to get specific advice relating to their own personal situation, because everyone's different. Everyone has a different strategy. Now, we've got a point here. So in New South Wales, at one point, we did have an opportunity to choose whether we were going to take a land tax only approach to our purchases or pay stamp duty and therefore not have to pay land tax if you were under the threshold. And so this is even with your own home, I believe. So do you, should we open that can of worms? Like, do you have a view on the value of stamp duty over, like abolishing stamp duty and everyone having to pay land tax every year?
Well, just to touch on it, I think they when they were talking about all that, they did find that if you're going to own a property for a long period of time, then you're probably better off just paying that upfront stamp duty rather than an annual amount to the Office of State Revenue.
Yeah, exactly.
And you've got that annual expense. So, if you're going to hold the property short term, like, you're going to hang on for, a year or two, then obviously the annual payment's better. But if you're going to hang onto it for 10 years or more, then particularly if it's your home, you may be there for 20 years. You'll end up paying a lot more than what you would have paid if you'd just done that initial lump sum payment of stamp duty when you first.
So tricky.
Yeah.
Okay, alrighty. Well, thanks for that insight. So wrapping up then, so key tips. I think we're, all agreed that one of the key things that buyers should do is make sure they check their land value before they make a purchase. So it's something that's relatively easy to do. A lot of the portals and systems, you can get your land value pretty easily. If you don't have access to something like CoreLogic, which includes land values, then you should be able to go to your state or territory Valuer General's site and put in the address to get the land value. It is absolutely something that people should consider, as well as the price and the longer term strategy. Brandon, do you want to cover off that last point?
Oh, yes, of course. Yeah. So registering for land tax. So it's up to the landowner to register for land tax through the relevant Office of State Revenue in the state or territory that they own property in. The importance of doing that is that if you don't register, it will eventually catch up on you. And I've had instances where a client's come to me and they've gone, I've got 5 years worth of land tax to pay, and that's because the ATO, it's reported in tax returns they've got this rental property, and then the Office of State Revenue finds out, and then they get in touch with the landholder and assesses them for land tax. So it's a situation you don't want to be in, having a surprise where you all of a sudden get a big land tax bill and they want payment right away. So
yeah. Okay. So Scott, is there anything else that we need to cover off on this point?
I just think for properties that you own, check your council rates notice. Often the land value is right on there. So that's the quick place I go to. Or if we're speaking with a client and they don't know their land values, have them give that a look. Just one thing on land tax. Look, I have a lot of people come to me and they say land tax is theft. They really kind of view this as a very negative thing. It is a source of revenue for our state governments, and we require services from our governments, and they have to be paid.
Yeah.
So if we want to get rid of all these taxes that we don't like, we need to come up with other ways for the states to raise money. So just kind of a big picture perspective there is, if it's not land tax, what's it going to be? If we're going to get rid of stamp duty and move to land tax, okay, that's fine. I do feel that the states are offloading their land tax liability on the federal government because, as Brandon had noted, this is a tax-deductible expense. So,
Yeah.
very, very naughty state who's run its affairs very poorly. Thinking about VIC. Raise its land taxes a lot, and the person pays them, but they'll get back that on a portion of that on their federal tax return. So in a sense, they're offloading some of that tax obligation on all of us, the taxpayers. So it's just kind of a necessary evil we have to live with, and hopeful that I think in Victoria that we do see some changes there. Maybe with the next government, we'll see.
Maybe. Okay. All righty. Well, that's it for us. So let me see if I can get my screen back. And yeah, so all of us. All right. So thanks again, Brandon, for your insights. If people want to speak with Brandon, his contact details will be in the comment box below. And so wrapping up, thanks for watching. If you want to talk to Scott or me, our details will also be in the comment box below. And next time on Market Watch, tune in because we're switching from Market Watch to Location Watch, and we'll be covering off the topic of where is the best location to buy in over the next 6 months. So don't miss it. If you want to be notified, make sure you subscribe. And that's it for us. Wrapping up.
Thanks, everyone. Thanks, Brandon. It was great.
Bye.